As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. Today our very special guest is Rob Kirby, founder and host of KirbyAnalytics.com. He has worked with the largest mutual fund company in Canada, and as he states on his website, he admits that he was once on the other side, working for the financial houses there, and quite content to label people who believed in large international players manipulating the gold market as paranoid. But now he's on the other side. He's writing a book about chronicling how he moved from the camp of being a disbeliever to that of an ardent gold bug, chronicling the history of the who's, the why's, and the how's of gold price suppression. Rob, thank you for joining us on Reluctant Preppers.
Nice to be with you.
A lot of our listeners are quite concerned about being able to protect their family's livelihood and their property, their nest egg, anything that they've accumulated both now and going forward in the future. And your insights as an expert in the gold and derivatives market, if you could share with us, first of all, some of the evidence that you've come across that really indicates price suppression and manipulation. Then secondly, what does that mean about the global economy and why would that be happening? What are the connection there? And then really bringing it in the end down home to the individual family, and what does it mean to them and what steps they can take to help secure their financial future. So if you could start walking us through some of the major evidence that you see for gold price suppression manipulation, just to help people understand that this is not a conspiracy theory. This is facts that you see played out over and over again in your research.
Probably the best place to kick off, and to, in all honesty, to direct some of your listeners to a really, really great source where a lot of the evidence of factual evidence of gold price suppression is documented and posted, is at a website called GATA, GATA.org. And what GATA has been doing, I'm actually considered to be closely affiliated with GATA, and the founders of GATA were Bill Murphy, who's the proprietor of lemetropolcafe.com, and Chris Powell, who is the secretary-treasurer of GATA. And GATA was formed in the late 1990s, and GATA came together after Bill Murphy spent time living in the accommodations of a brilliant researcher by the name of Frank Veneroso. And Frank Veneroso had been doing, is a great researcher, like I say, and in the 90s, Frank Veneroso was very close with a guy who was extremely senior in the Bank of England, who was managing the Bank of England's gold position. And this chap from the Bank of England in the late 1990s began voicing his concerns to Frank Veneroso about the amount of gold that was being leased. And when gold is leased, it's surreptitiously sold into the market to raise money. And this head person at the Bank of England, or a very senior person there, was voicing his concerns over a period of time to Frank Veneroso. Frank Veneroso was sharing this research with Bill Murphy, and Bill Murphy, who had a history in the futures business, he began writing about it, and ultimately ended up starting a blog called Le Metropole Cafe, which is a gold bug, known as a gold bug site. And he began writing about basically voicing the concerns of his mentor and good friend Frank Veneroso. The documentation that central banks manipulate the gold price, to start at the very beginning, central bankers themselves are on record saying the job of central banks is to, I think the terms they use, they call it financial repression. And when you financially repress something, you basically guide the price of something to a predetermined outcome. This is also known as price rigging. And that's all well and good, except in the United States, there are laws called the Clayton and Sherman laws, which expressly prohibit rigging of markets. And it's contrary to commodities law as it's written in the United States of America. And until these laws are revoked or rewritten, it remains that rigging of markets is a criminal act. So so I guess in a nutshell, the real nutshell of the evidence of central bank and bullion bank manipulation of the gold price comes from the players themselves. And further to that, I would equate the work done by GATA and followers of GATA as independent minded researchers, many of whom have extensive market experience, whether it's in the interest rate arena, whether it's in the commodity trading arena, have effectively been running around with I'm going to say with clipboards, gathering and documenting further evidence as to the extent of the manipulation of the we often refer to it as the paper price. And when we talk about the paper price, we're usually talking about the price in the case of metals in particular. We're talking about the prices as determined by the COMEX exchange in New York, where the price of gold and the COMEX exchange is effectively the futures price of gold. And we often like to differentiate between the futures price of gold and the physical price of gold, because I can tell you right now on firsthand knowledge that I possess through contacts of mine that are in the international procurement business, I know that currently premiums for large amounts of physical bullion in Asia, so as a for instance, if you need to go out and acquire 5 tons of physical gold bullion right now in Asia, there's a very, very good chance you're going to be paying spot plus 75 to spot plus 100%. You see, and what this does is it makes a mockery of the paper price in New York as set by the COMEX exchange, where you have gold trading at roughly $1,200 an ounce. But all I can say to anybody who wants to try, if you think that that is the price of real metal, go buy some contracts and try standing for delivery and having them converted into metal. Because I'll guarantee you you'll be faced with a lot of pitfalls along the way, and you might find that obtaining physical metal through an exchange like COMEX is a pretty tough nut to crack.
Right, and you mentioned on your blog, you said, I'm a veteran of many markets but couldn't make heads or tails of what I was seeing in the gold market. People told me the gold market was rigged, and initially I thought they were paranoid. And you said early on you dismissed the empirical observation and findings as merely coincidence, but it aroused your curiosity. So in addition to these physical shortages that you're describing and these premiums, there's been unnatural trading action as part of this as well, right?